What if I told you that you might have a better shot at picking winning stocks than Wall Street pros? Sounds crazy, right? Well, legendary investor Peter Lynch believed right that. And into today's video, we are diving into the rationale behind this bold statement, taking inspiration from his book One Up on Wall Street. But before discovering why retail investors have a hidden advantage over big guys, don't forget to subscribe to the channel, leave a like and share this content to help me grow in the community. And now let's begin. Let's start from a bit of history. Peter Lynch ran the Fidelity Magellan Fund and delivered an insane 29.2% annual return over 13 years, meaning that it wasn't just good luck. And here's the kicker, because he didn't rely on complex algorithm or Wall Street gossip. On the contrary, he found stock market gold in unexpected places, like the malls or simply keeping an eye open while walking around. So we can say that some of his best picks come from everyday observations. And that's a plus, because it makes everything easier and doable. Lynch used to take notes about innovative products poised to have a boom in sales, running some research afterwards on the robustness of the company, looking at the fundamentals, for instance, and boom, to invest with a good margin of confidence in the company shares. And trust me that following this approach, many of his picks became some of the biggest success of all time. His golden rule can be summarized in 5 words: invest in what you know. Now, hold on for a second, because it is not so simple. This motto needs a little bit of interpretation, because it doesn't mean that you have just to YOLO your money into every hot product you see. Lynch wasn't just about spotting trends. As we said before, he did his homework. He looked at the company balance sheets, earnings, and long-term potential. And here is where you have an advantage over the pros. Unlike fund managers that are stuck following binding rules and managing billions that from time to time is a disadvantage, because, as Warren Buffett noted, limited your potential to buy minority shares, giving a tangible influence on your total portfolio returns. You can move fast, buying into small, overlooked companies before big players even notice them, simply because are not under the spotlight yet, and by definition are not appealing or marketable with the investors, the people that put the money in the funds, so the big tickets, the wealthy ones. Because remember that fund managers and brokers are primarily selling a product to wealthy individuals, so it is easier and more convenient for them to put together something that can be easily marketable, filling the funds with some well-known names. Going to Wall Street jargon, Lynch coined the name 10-bagger, stocks that can grow 10 times their value. And this is absolutely sweet. Imagine getting into Amazon in the early 2000s, or Tesla before it took off. The secret: spot them early, do the research, and have the patience to let them grow. Because remember that the market is the device that transfers money from the impatient to the patient. As easy as that. In this regards, Lynch warns about chasing quick money or panic during market downturns. And once he famously said, the stock market is filled with individuals who know the price of everything but the value of nothing. And this is brilliant, because it's true. So let's recap. Lynch's biggest lessons for retail investors are: number 1, use your eyes. Everyday life can give you incredible stocks ideas before Wall Street checks on. Number 2, do your research, because not every trendy product is a good investment. So look at the numbers. Number 3, take advantage of being small. Individual investors can move faster and smarter than big hedge funds, and this is a fact. Number 4, be patient, because the best investment take time. In brief, think long term. So now that you know how Peter Lynch found his winning stocks, let me ask you, what's a product or service you love that's been booming lately? Drop a comment below, and who knows that you might find out the next big deal. Now, before saying goodbye, if you found this content insightful, hit that like button and subscribe for more powerful investment tips. And if you want me to break down more of Peter Lynch investment strategies, again, let me know in the comments and I will be happy to do so. See you in the next one. Cheers!